Hello, everyone, and welcome to today's recording. Thank you for joining me. Today, I'm joined by George Latham from WHEB. Hello, George. How are you doing?
I'm very well, thanks, Haydon. Good to see you.
No, it's good to catch up with you. We'll get cracking in a moment. Before we do, just a quick, brief introduction into why we're here. I'm the founder of Good Green Money. Clients come to us. We build portfolios. Within those portfolios, we look for the best, the most premium ethical funds that are out there, good quality ethical funds. And your fund, WHEB Sustainability, is a prime example of a good fund. During this conversation, we're going to learn lots more about that. So we'll get cracking in a moment. In terms of who WHEB are, you're a single office based in central London. I think you call yourself a boutique investment house, perhaps. Your fund's been in existence for about 10 years, but you've been in the game for a lot longer, a bit like me. You've been around, I think you've been in this game for about 25 years.
A little
I've got
while.
my facts about right there, George.
Hence the grey beards and the grey hairs in my beard. Yeah. So it's been, sometimes it feels like 25 long years, but it goes by very quickly. No, I've spent almost my entire career, my entire investing career, focused around sustainable and positive impact investing. For the first 15 years or so within large multi-strategy houses where we were, and where often, I was part of the team that was doing, the specialist fund that was focusing on green or ethical or sustainable. But then the last 10 years with WHEB, which, as you say, is a dedicated boutique, and this is all that we do and all that we ever do. But you say, as we say, we've been around for about 10 years, but actually the strategy was one that we first originated in another place, if you like, before we decided to take it here, so that we could build a business in the image of the strategy, where if we want to build a sustainable investment strategy, we want to build a sustainable investment business that sits behind that and matches that. And so we can talk more about that too.
Oh, that's great. No, that's good. Thanks for adding a bit to meat to the bones there. I think a good place to start is that you focus in on 9 key themes. So we can touch upon those. They're split between 5 sustainable investment themes and 4 social themes. And just to run through what they are, in case anyone watching isn't familiar, there's environmental, cleaner energy, environmental services, resource efficiency, sustainable transport and water management. And then the 4 social are education, health, safety, and well-being. So it looks like, George, you're very much about people and the planet, right?
That's right. I mean, the original definition and what sits at the top of it, I mean, in a way, the 9 themes are incidental. Below those 9 themes, we have something like 25 end markets and sub-themes, and looking for sustainability drivers, as we call them. But really, the definition that sits at the core, and the reason why we were different, very different when we first started, and still are often different from many other managers, is that our first focus is on the product and service that a company is selling. And we want companies, we believe that we're in the early stages of a massive transition in the shape of the global economy that is going to lead to a zero carbon and more sustainable economy. That has to happen to be able to provide healthy lifestyles for 10 billion people or more on this planet by mid-century and beyond, to deal with the challenges of scarce resources in a world where resources are necessarily finite. So we're going to see that transition happening over the coming decades. And we want to invest in the businesses whose products and services actively are enabling that transition to happen. So we're looking for companies where there's a lockstep relationship between them seeing more growth in their end markets, so selling more of their product or more of their services. Every time they sell more services or more product, that leading to a positive outcome, a positive impact on society or the environment. So we're looking for that dynamic at the origin, and then what falls out of that is then those 9 themes. And so it is about people and planet, because sustainability, we need the environmental challenge. We need the environment to be livable, so we as people can live in it. So people and planet are inextricably linked, and that's at the core of the sort of sustainability dynamic. And we're looking. The core definition is not so much about the 9 themes, but the most important thing is about looking first at products and services which are actively enabling a transition to a more sustainable and a zero carbon economy. And therefore, if we see that transition happening, the companies that are enabling that transition to happen are also the companies that will benefit from that transition happening. So we'll see, what we need to see is those end markets growing in order to have a more sustainable economy. The companies that are enabling that to happen will be the companies that can grow their business over time in other parts of the market, other parts of the economy where their products or services perhaps work against a more sustainable economy or don't actively contribute. Maybe we need to consume less of those products, or maybe we don't need to consume those products at all. And so, but those other end markets, which we don't focus on, are therefore markets that face more of a threat. So we're focused on the businesses. When we first set up the strategy, it was originally known as the Industries of the Future strategy, or the Industries of the Future Fund. We had to leave that name in another place, sadly. That was a nice encapsulation of what we do, because we were looking at the industries which are actively enabling that more positive future that we want to see.
I mean, that's fantastic, George. It just fits so well with the typical client that comes through the door. Good green money, net zero, climate crisis. I mean, they're all buzzwords that are out there now, but most people that sit in front of me have been thinking about these issues and concerned about them for years and years and years. The fact that you're there addressing them is fantastic. One thing we're not really, I don't intend to touch on too much today is the concept of greenwashing. That's perhaps something for a conversation at a time. Yeah. But part of my company's remit is to drill down into what makes a decent fund, what doesn't, and talking now is really useful. But one thing I'd like to touch upon now is transparency of information. And I think where you guys really lead the way is that you're very open in terms of who you invest in, what your investment process is. You produce some fantastic reports. I mean, help me with this, but the detail that you give about every investment that you've got on your books, you're there, it's published on your website, it's there, it's an open thing. It's great.
Well, thank you, Haydon. It's nice that it's appreciated, but it can take quite a lot of work sometimes. But I guess the philosophy that sits behind it is that, as we came out of the big, multi-strategy fund manager and went away from being the niche in somebody else's business to building our own business, that is where this is all and everything that we do. As I said at the beginning, the point is that we wanted to build a business that has the same kind of philosophy and attributes of being a sustainable business as sits at the core of our investment philosophy as well. So, a key part of that is that we should be building a different kind of relationship with our clients. We want to build a different kind of fund management business that has this open and transparent and hopefully a trusted relationship with our clients, that the fund does what it says on the tin, that we're striving to do, honestly what we say we're going to do for our clients. And so there is a very sustainability is described or defined in so many different ways in an investment context, and it can be really confusing to people. And the most and we can both be as clear as we can about what we mean and what we're trying to do, but the best way of trying to bring that to life for people is to tell people what's in their fund. It's when people invest with us, that's their money, that's their investment, it's their money going into the owning parts of businesses that are hopefully doing good things, are creating a better future. And we want to have people create a channel through which people can connect with what their money is doing and where it is invested, and then how that investment is associated with better outcomes and positive outcomes and a positive impact on society and the environment. That's kind of at the core of what we do. It's through having that transparency, we find actually that we probably end up getting less awkward questions from clients, because clients can see what we're doing and they can see why we're doing it. Decisions aren't always black and white. It's when we say that we want every investment and every product that we invest in to have a positive impact, or every company we invest in to have products that have a positive impact on society and the environment. Now, there's often a weighing up, a netting off we need to do to find that positive impact. So a business makes widgets that do something that is good. They make software that promotes a more efficient fuel economy, or a product that does something that has an environmental benefit. It'll probably cost something in terms of resource use to make that product. It'll cost carbon and energy to make that product. We need to think about that, analyze that, and look at where there's a positive, the positives that product leads to outweigh the costs of achieving it, and that there is a net positive impact balance. We want to show people how we've done that.
Yeah, absolutely. I think you've hit a really good point there, that when you're in this game, there is a lot of, well, I don't know if compromise is the right word, but you have to think deeply about what's the net outcome of where you're at. And yeah, I think transparency forms part of that. I'd just like to add, I've been to some of your investor days where you sit up and you necessarily, but some of you guys stand up and give some really good case studies. Below, your head of research, it's really good at bringing this stuff across. So yeah,
I'll let them know.
Come along to those in the future.
Well, it's been an awful shame over the last few years not to be able to do that in person so much. But I can mark a date in your diary, the 29th of November, that we're back with our next investor conference. So
I can
we'll hopefully see you then.
It's already in the diary. So we can catch up then. Okay, so this is great. I mean, we've spoken a lot about the theory, about what you do. Let's just add a little bit of colour here. There's a couple of examples that I've picked out, which I think we can make for a interesting case study or two. One that's sort of planet related, one people related, one that probably crosses both. Just give me a little bit of an insight into what these companies are about. So one is there's an American engineering software company called ANSYS that you're invested in, which seems like an impressive business. What can you tell me about them?
Yeah, ANSYS is a design software business. It's a US business, as you identify. It's an engineering simulation software, basically. So it enables other businesses to innovate on their platform and to test engineering designs. And so they enable companies, when they're doing their R&D, where they're trying to innovate, trying to develop new products and services, or try and develop new frameworks, to work out, to simulate and work out how they're going to work and whether they're going to work well or not. And so they're deep in the sort of innovation process, they're deep in the R&D process, and so much of what they do is targeting end markets that have environmental benefits, principally environmental benefits, also some social benefits, some medical technology and markets as well. But their products are used to design other products, or their software is used to design other products that have better fuel efficiency, that are in the renewables value chain, so testing blades and how aerodynamic they are for wind turbines and the like. So safety applications, so looking at simulating better safety applications in automotive and the like. A lot of electric vehicle end markets that they target, trying to simulate how those are designed, weight and power trade-off that you can design in software. And that means it's much more efficient in the new product development process for a whole range of end markets and companies to develop products. And so much of what they do has principally an environmental and objective, but often a social one as well. There's parts of what they do that fit within our sort of health theme as well, where they are used to design medical technology products as well.
I mean, I just think that's a great example. I mean, resource efficiency is so important, and an enabler such as that can work with other businesses to do that. It can have real powerful impact. So
yeah, absolutely. But I mean, it's a good example of where sometimes you can invest in the sort of the end product that is the wind turbine that you can see the positive impact is happening. Sometimes you need to go back down into the value chain and look at what's really enabling that product to be developed, or that design to be perfected in the right way. But a lot of what we do is looking through value chains and looking through to find attractive opportunities of enabling technologies or enabling products that enable better environmental outcomes to happen.
Oh, that's good. I mean, the other thing is it's a sort of investment, sort of company that somebody in the UK is looking to invest and do the good thing, might want to invest directly in the company. It's not necessarily somebody they would come across. So the fact that you're there putting it within your portfolio is fantastic news. Let's move on to a people example, something with social good. There's a Danish biotech company you're invested in called Genmab. Tell me about Genmab.
Yeah, well, as you say, Genmab's a Danish company and fits within our health theme. Essentially, again, it's also an R&D company. It's a biotechnology company. Its end markets are generally oncology drugs. So they have a lot of they create therapies that treat cancers. They have a very they have a world-leading platform for discovery of antibody technologies and a very strong pipeline of therapies to treat a whole range of different cancers. And they have a very strong track record of bringing new products to market to treat those diseases, which are often very severe and have few existing therapies that are effective. So they clearly, within their sort of user group or within their target market, they have customers who are very vulnerable, who are very sick, who have very few other available treatments, and GenMap have got a very strong track record of being able to have sort of relatively positive outcomes for those patient groups. So for that section, there's clearly a very positive impact of what they're able to achieve on that group, on that end market group.
Thanks for that, George. I mean, over the years, one of the client bases of people that often come to me have come from the medical profession, NHS consultants, surgeons, etc. So, I mean, it's the type of thing that they would relate to specifically. I think we all would, though, of course. Mm-hmm. So, no, another good example. One final example, a company that people may well have heard of, and as I alluded to earlier, People and Planet. I think you've got a decent holding in this company. HelloFresh.
HelloFresh, yes.
Tell me about HelloFresh.
HelloFresh is a German company, and it's the world leader in making meal kits. So they deliver meal kits that allow you to buy a particular meal or subscribe to their service to have delivered a meal with all the ingredients ready, so and the recipe, so you can easily make a meal. So it's a bridges rather than buying sort of ready cooked food, or if you like, or rather than going out, then it is, it means that you can cook at home, but you can cook at home in a more efficient way. Because what is the sort of positive impact for that? Because clearly you can go and buy food in the supermarket. The positive impact is that their meal kits are very much targeted towards healthy eating. So they're very much a leader in promoting healthier eating. And they also, which is lower salt content and higher vegetable content and all the rest of it, but also the use of meal kits has been, there's quite a lot of academic studies that have shown that the use of meal kits can promote much less food waste, and food waste is a huge problem because we essentially buy a lot of food and then I think waste about a third of it.
I think on their website they quote they use 82% less food than traditional food retailers. Sorry to interrupt. Yeah. I thought that was quite a powerful statistic.
Yeah. And so there's some good studies that show that, and so there's a kind of both a sort of healthy eating sort of objective there, and also a food waste objective that the growth in their business promotes. So that's where we see the positive impact. We talked earlier about there's often trade-offs. And one of the trade-offs we see with a business like HelloFresh is that there's quite, because you're taking relatively small amounts, there's quite a lot of packaging involved in sort of wrapping up those small amounts to send them out in the meal kit that go. And that's both a subject for our engagement. So we haven't really talked about engagement and stewardship, but it's a crucial part of what we do, is how we make the conversation we have as investors, as owners on behalf of our clients of part of that business. And we promote a very active dialogue, and we've talked to HelloFresh specifically quite a lot about the innovations and the progress they're making on reducing food packaging or making it more sustainable. So they've made quite significant advances. They have quite good technology for making the packaging involved in food in their meal kits both more sustainable, to have less of it, to make it more recyclable or more compostable, and so on and so forth. So that's an area of healthy dialogue between us and them.
Yeah, again, I have had a quick look at them beforehand. It says they're CO2 neutral on their delivery, so they do what they can to offset the impact of that, which is good. I mean, you touched upon stewardship. It's such an important thing. Maybe it's such a big topic. Maybe it's something we don't go into too much detail, but it is an important thing. The fact that you're a major shareholder in some of these smaller businesses, that you can talk to them, they'll have to listen about the relevant issues. That's the whole point of this. And if I invest somebody in your fund via my business, then it works its way through, and you can have some influence over those.
Yeah, absolutely. We talk about being an impact investor. We invest. As a business, we have a mission that our mission is to advance sustainability and create prosperity through positive impact investments. And so we very much see our role in the value chain, if you like, as investors, as sitting between our clients, whose money it is, and the real economy, as channeling that towards trying to have a better impact to create more sustainable outcomes. So we want to be part of that future that we want to see, and be part of creating it. And so both what we do is to align our investors' capital with what we see as the impact economy, companies which are having a positive impact, but we want to do more on top of that. So we talk about what we call the investors' contribution. So both by channeling more capital towards those companies, then we have an impact on what's called their cost of capital, their cost of generating the funds for investing to grow. But we also, through our engagement and through our stewardship, both at a company level, a sector level, a market level, and a policy level, we also look to push ourselves to accelerate that positive impact, to accelerate the transition to a more sustainable future. So stewardship at all those different in all those different ways, whether it's about trying to frame market structures, and we have long conversations with regulators both in Europe and the UK about trying to stop greenwashing and the kind of things that we've just been talking about there, but also with companies, so whether it's HelloFresh about their packaging, or GenMab we talk to about pricing of drugs, because clearly if you overprice those therapies for those vulnerable communities, then you're going to undermine your impact. So again, the other areas where stewardship and engagement are really important.
Well, there's some really great insights there. So thank you for sharing those with me, George. It's given some absolute added colour to the whole process. I guess what I'd like to move to now is that perhaps, I don't know, maybe I've been a little bit too sycophantic about your business, and in the way that an advisor works. You talk to a client, you always tell them about the good things. Maybe these are the risks you've got to consider. Let's play devil's advocate a bit here, George. So you're out there, you're looking for investments. Your investment universe is a lot smaller than it could be. Mm-hmm. Is that a risk to the end client? I'm thinking about people that maybe are cynical about this type of stuff. What would you say to them?
Yeah, there's no doubt. There's lots of the market. We are very specialist about what we do. So we ignore, our target market for the kind of companies we believe have that lockstep relationship between unit sales growth and a positive impact is naturally quite closely defined. We don't invest in 85% of the traditional market. So it depends how you think about risk, really. Risk, yes, that we're different. We're very different. So our trajectory, the way that we invest, is far away from where some traditional investors will invest. But we have plenty of opportunity set, and we think that opportunity set has advantages, because we believe that the world will transition over the coming decades towards a zero carbon, more sustainable future. And if we're investing behind that, that puts us in a reasonably good place to be. Similarly, the inverse of that is that we think that some of those other businesses which we leave aside, fossil fuels and even some traditional industries, face significant risks from that transition. Now, that's where you will face the risk of stranded assets and potentially a permanent loss of capital, because some of those businesses will get regulated out. Now, a lot of that can also be a matter of timeframes as well. And one of the really important things I think that sits at the core around sustainable investing is that it does require that longer term perspective. That longer term perspective in terms of the transition to a more sustainable economy is something that's going to take decades. And these trends are something that are going to play out over a long time. But that is about investing as opposed to trading. So we invest behind companies that can grow profits on a sustainable basis over the long term, as opposed to trading shares on what we think news flow is going to be in the short term. So we think we have quite a broad opportunity set across a broad range of end markets. As you've just talked about, our themes are across as wide as cleaner energy to health and medical technology, to education, to water and water management, to sustainable transport and and care for the aged and well-being and safety in other areas as well. So you have a very diversified opportunity set, but it is different, and it is different from the main and traditional opportunity set that comes from the wider market. Now, we happen to think that's a good place to be. It's also where we want to be because we want to have an impact. So it's where our mission takes us, and we think that is a good place to be. But in terms of risk and volatility, then yeah, it's different from where traditional indices are.
Yeah, I think that's again another great summary there. Where I would come into this is that when I'm building the company's building a portfolio for a client, we wouldn't put all of our eggs in your basket. Sorry to say that, George. I know
no, I appreciate that. Not many. I think a lot of people wouldn't, except myself. Obviously, I put pretty much all my own eggs in my own basket. So that's my. But yeah, no, we don't tell everyone else that they should do the same.
Yeah, indeed.
And I think of it. A lot of people are. We're seeing. We have a range of investors within our client base, and we have an increasing number of pension funds and institutional investors as well. And some of them are seeing it like a different kind of asset allocation. So it's like this is a long-term strategic positioning that is akin to choosing between equities and bonds and property, but you're choosing towards the impact economy, if you like, and I think that's it fits within a broader context like that.
Good. I guess another interesting question that might be asked for people that aren't in know this type of stuff. What happens when it goes wrong? You've done your due diligence on company X, something comes out the woodwork. How do you react? Do you immediately disinvest from them? Do you get around there and tell them off?
This is going to happen. I mean, we don't have perfect sight or perfect foresight. We do our due diligence, we do a lot of research, but these are complex structures and complex companies, and things can happen that we haven't seen, or companies can change, or management can change, and so on and so forth. So we have to both have a continuing set of monitoring. We have a deep and a growing resource team. So we have an core investment team of 6. We have additional research resources of another 3. So essentially we've got so 8 or 9 on investment research team. We're covering have a portfolio of 43 holdings. So, and we hold them on average for a very long time. For a long time, our average holding period has been like 7 years or longer. And so this is sort of slow moving, sort of deep contemplative research, but still so we're continuously monitoring to try and see where things have changed or where things do change, and assess for that. Now, when things go wrong, sometimes you'll get a news flow of something has happened that we didn't foresee, or that we're not happy with. Then it kind of depends on the situation. But we want to make sure that we've understood it and understood the implications of it well. So we'll often try and talk to the company and try and have an engagement with them to try and understand why things have changed. But we're not afraid of acting quite quickly if the situation demands it. So if there is if there is something that has happened that suggests that either we've got something very wrong, or that something very untoward has happened, or the situation has changed very dramatically, then we're not averse to just making a sort of fairly snap decision if that's what's required. But we like to, the same way as we like to sort of research before we buy, we like to research before we sell as well, in an ideal world. But the situation won't always allow you to do that.
No, indeed. I think, in the majority of cases, you're going to know that business so well that the shock should be few and far between, hopefully. I think we've covered a lot of ground. I think we've covered more or less most things that we need to touch upon. But there is one extra thing I'd like to highlight, because I think this is great. The fact that you guys are a B corporation. Now, let me just get my understanding right on this, because I'm looking to move my own organisation down this route as well. So the B corporation, a lot of these things that we've spoken about, you then embed them in your own organisation. That's you're very environmentally aware and make measures to improve your environmental footprint. Socially, you have got diversity within the business and lots of other areas. You're just a good egg. You're a good business. To commit to that, you actually have to change your articles of association, which is a written legal document that says, I will do this, or our business will do this. And then the third thing to point out is that you then have to produce an impact report annually to show how you've done that. So that's the concept behind a B Corp. I know it's close to your heart and something that's important to you, George, isn't it?
It is, yeah, no, really important. I mean, as I said, we came out of the larger, sort of broader base fund manager to build our own business, where we wanted the business to be a sustainable business and to have a kind of different approach to the fund management industry, that was in the image of the investment strategy we have. And we did that in 2012, and then B Corporation came to the UK in 2015, and actually one of our clients rang up and said, no, this is coming to the UK, I think it'll suit you very well. And it was basically a way of formalizing what we were already trying to do. And it's a wonderful movement. It's a global movement of businesses. B Corporation, now hands up, disclosure, I'm an ambassador for B Corporation. So I'm biased, but it is a wonderful movement of business as a force for good, goes across all sectors. So many businesses that'll be very familiar to you and also to your clients are already B Corporations in the consumer sector and in other sectors of the economy. So Patagonia, Etsy, Packatees, even though they're owned by Unilever, are also a B Corporation. So and I think there are getting on for 4,500 B Corporations around the world now that have gone through the full due diligence process and become certified B Corporations. And as you say, it's a due diligence on ourselves as a business in terms of how we act as a stakeholder business. So how we create value for our customers, how we create value for our employees, how we create value for the environment, for how we create value for civil society, for the other stakeholders in our business, and that being the platform on which we ultimately then create value for our shareholders. But the first objective is we want to create value for all of our stakeholders, not just the shareholder, which is the kind of traditional notion of shareholder primacy. And so B Corporation is a way of doing that in a formal sense and to measuring that as well. It is perhaps, as a fund manager, I spend almost all my life being due diligenced on our investment process, of people crawling over us and saying, well, how do you do it? What are you doing right? What are you doing wrong? Do we think it's any good or not? And having to, so we spend a lot of our time being, with people like yourselves, crawling over us and trying to work out if we're what we're doing and whether we're doing it well or not. The B Corporation is probably the most extensive and comprehensive and detailed and tough due diligence process that we've gone through in the last 10 years, and we go through it every 3 years. So recertified twice now, and it's great because every time we go through it, we learn lots about there are lots of questions that ask us about whether things or structures or processes that we could have in place for our employees, for our customers, for our other stakeholders that maybe we have in place, and we don't have all the answers by any means, but we learn every time, and that helps us to be on a sort of path of continuous learning ourselves and continuous efforts to try and improve and get better and to stretch further.
Yeah, I can attest to that. I've been through the questionnaire, and it's very long and elongated, but it's definitely worth doing, and it can help you structure how you run your organisation itself. And one thing just to highlight, as I've told you before, when we're looking to build portfolios for clients, the fact that you're a B Corp does, add that extra level of credibility that we know we're investing in the right space. So you're getting some financial comeback that you'll get clients coming your way because of that. So if there's any other fund managers out there who happen to be watching this, take notes. Follow George's lead. He's an ambassador. He'll tell you what to do.
Well, we have got a commitment also to work with and help other businesses to follow the same path as well. So the offer is there to talk to others.
Yeah, that's good stuff. Right. I think I'm more or less going to wrap this up now, unless you think there's a couple more things to point out. But is there anything you think I haven't covered yet during our conversation.
Well, obviously we could talk all afternoon, Haydon, but and I think just a couple of things that are useful. There's a lot of material on our website that's very open and very available. You said that we do quite a lot of comprehensive reporting, but there's stuff on there that I think is worth which you might show to your clients or they might look for themselves. One, we talked about transparency. We have one of the things that we do, which is still I think unique in the fund management industry, but I don't know really why we haven't managed to get anyone to follow our lead in the last 10 years, but we have an external investment advisory committee that's staffed with independents who are experts, particularly in the sort of sustainable investing field. And we have this definition of what kind of companies we will invest in, and we have to justify to them when we meet them that every stock in the portfolio meets that definition. So they take us to task on the examples we just discussed, whether it's Genmab or HelloFresh or Ansys. We had that discussion and say, well, what about HelloFresh? What about their packaging? Are you really looking at hard enough of that? Is that outweighing the benefits of healthy eating and food waste? And so we'll have that debate with them. We'll have that conversation with them, and we go through every holding, particularly new holdings in the portfolio with them. We then publish the minutes of that meeting. So that kind of challenge that we've got from an external and an independent source, we then publish on our website for anyone else to see. And I think that's a great discipline for ourselves. We learn lots from talking to them, but it also is useful, I think, for clients to see, as again, those conversations. It's not always black and white. There are dilemmas that we have to face, and but if we do that in that kind of open and transparent forum, then hopefully people can understand that we've at least had that debate in an honest way and with integrity. We won't always get the answer right, but we've approached it in the right way. So that's one thing. Say again, Haydon.
You've got nowhere to hide as well.
Yeah. But the other thing is when we focus on impact, and both from our mission to have an impact, but also investing in what we call the impact economy. I think as an impact investment, one of the commitments that we have is to measure, manage, and report on the impact that we have and the impact of our portfolio. And so that has created. We've been now writing impact reports or reporting on our impact for 7 or 8 years now. And we've come a long way over that time in trying to develop new methodologies. This is a new area really where people are still trying to understand how we do this, and we've been somewhat, I think, at the forefront of trying to develop that. And there are a lot of tools that we develop, and one of the ones that I think you've seen, Haydon, and used with clients before is what we call the impact calculator, which is where we look at the products and services that we invest in, and what the outcomes associated with those products and services are. So whether if it's a product that leads to better fuel efficiency or better energy efficiency, then what's the carbon avoided by those products when they're being used? If it's a renewable energy technology, then how much renewable energy is being generated by those products and services? And we're able to, through our research and through the methodology we've developed over the years and tested with the Carbon Trust over the last few years as well, so had them review the methodology and also the calculations that we use. We developed what we call the impact calculator, which enables investors that we can calculate at the whole strategy level, the sort of 1.5 billion sterling or so that we managed, and we can put right down to an individual's amount invested, whether it's sort of an ISA amount of £20,000 or something. We can put any amount into the calculator, and we can look at the amount of what are the impacts that are associated with that amount invested over a year. And that kind of is not to create a kind of audited statement, but it kind of brings to life what money is actually working towards or associated with. It's really important that we explain that well, though, because ultimately we can't claim that money is having that impact directly, because it's just part of the value chain. The person who has the impact really is the person who has the solar panel on their roof or drives the electric car. They're the ones who are having the impact. But because we're in part of the financing of enabling that product to come to market, then you're associated with that along that value chain. And that's how we, one of the methods we use to try and bring to life, so people can kind of start to conceptualize what an amount of money is associated with. out in the real world, both across social end markets or social outcomes, and also environmental ones too.
Oh, that's great. I would say that yeah, the typical client that comes through my door doesn't come by accident. They're actively seeking to make a difference in this way. So to see it in such a visual way, and I've used that calculator, as you say plenty of times. It's dead easy. Just putting them out of money. It gives you kilowatts, etc. as an output. It's great. And the fact it's signed off by the Carbon Trust gives it even added credibility. So that's great news. Right, George, I think we're about talked out, aren't we? Before we sign off, just a couple of other things to say that anyone that's watching this, just to come on my backside, this is not advice, this is information. Maybe raving about George's business and his colleagues, but it has to be right for you. There's all the usual written stuff at the end of this, covering off why you need to be wary when you invest. So come to somebody like Good Green Money or another decent advice firm before you think about investing. And the last thing to say, if you like this, look on our YouTube channel. You'll get it via our website. Subscribe, and then whenever we get new videos being loaded up, you'll be informed of them. So there you go. Done my piece. Thanks again, George. It's been great. Really
Thanks,
good.
Haydon. Good to talk to you.
It's a fantastic conversation. I'll see you again. I'll make sure I'm there in November.
Great. Thank
See you
you.
later. Bye.